Good evening, traders. Today is Tuesday, January 10th, 4:01 p.m. Markets are closed. Something has changed in the matrix today. Under very quiet auspices, the markets weren't up too much today. Very modest, right? As you see there on your screen. But what I'm going to show you next is actually evidence of a trend reversal. Okay? We're going to get into it. First, let me show you from a chart from last Friday. And you're thinking, what's the big deal with last Friday? Well, this is Tuesday. I want to call your attention to this zone right here. Remember when the markets surged in pre-markets? In this zone right here is when it found significant resistance. 1, 2, 3, well, 3 times, right? But then after that, after it got past this zone, it took off. Okay? The 4-hour EMA. I've made a big deal out of that in the past. On last Friday, that's what it hit. This line right here, the 4-hour EMA. See that? Hit it, came back up, came up to the 6-hour EMA, failed it, tried to find support on the 4-hour, failed that, tried to come back up, came down, tried to come back up, found resistance. Okay? The 4-hour EMA is a significant line. It's not the most significant out of all of these, right? It's not. I mean, all of these are significant. But the 4-hour has dogged the markets, has denied the markets since FOMC December 14th, 2022. Ever since that day, the 4-hour EMA has denied the markets. Okay? Meaning it has served as resistance, and the markets could not overtake it, meaning rise above it, back test against it, and then go up. It could not do it. Okay? This is the 5-minute chart. So it did it on the 5-minute. But it hasn't been able to do it on the 4-hour chart, meaning the 4-hour chart could not take over the 4-hour EMA 50. Okay? It could not do it. That is until today. It did it. Right here. It back tested. This is the 4-hour chart that you're looking at. It back tested the 4-hour EMA and successfully back tested that. You see that right there? It's actually got space. There's daylight in between there. It hasn't been able to do it ever since FOMC 1214 right here. It hasn't been able to do it until today. Yesterday's pullback. Remember yesterday? Everyone was like, wow, that kind of pulled back a little bit deep. So really it wasn't deep in terms of relatively speaking, compared to the EMA 50, the 4-hour EMA. The pullback was deep because it was a greater than 100% retracement on the Fibonacci from the opening of the day to the close of the day. So it was a red day. But I'll be damned. I was like, what? It actually passed the back test. It did it today. Today, January 10th, is the first time since it lost it on the 4-hour chart on FOMC 1214. Prior to that, you see that? It was moving. It was going. See that? All of October and November and into December. And now it has it back. So what does that mean? I'm not saying we're going to go on a 2-month run. I'm just saying you have a trend reversal. Okay? You got to understand clearly what I'm saying. I'm not saying, SPY to 600 now. I'm not saying that. I'm not being bullish either. I'm just saying you have an official trend reversal. Okay? So what we're going to do, we're going to go into each one of these days that I have here labeled E5. You're like, what is that? Okay, I'll get into that in a second. But for now, look at the MACD on the 4-hour. This is the 4-hour chart. Above zero, going up. RSI 74.5. See, none of this is bearish, guys. That's not bearish. Okay? Now, yeah, we're going to go into each one of these scenarios. So E5 just means EMA 50. It's just shorthand. EMA 50. This, the exclamation point is also shorthand, meaning failure. Okay? Exclamation point, failure of the EMA 50. And that's 6 in parentheses is 6 times. We're going to get into that. This was Friday, December 30th, the last trading day of 2022. So these other days, however, are successful 5-minute EMA 50s. Okay, during the trading hours. So what has been happening? What has been happening since FOMC? See, down, 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 down. Then we took a left turn into this rising channel. And since then, we've been building energy to get to today. That's what it's been doing. That's why in my past videos, you heard me say, guys, this doesn't look bearish. You've heard me say it multiple times. It doesn't mean I'm bullish just because I say that. I'm just calling it how I see it. So don't think that I'm bullish. I'm just telling you that doesn't look bearish to me, but that doesn't make me bullish. Okay, that doesn't make me I'm predicting SPY to 600 either. Okay, I'm just calling it how I see it, just like a referee, right? If it's bearish, I'm going to call it bearish. If it's bullish, I'm going to call it bullish. Okay, so yeah, we're going to go into each one of these days. And now I'm putting the pieces together. These individual days that we're passing, that we're taking back on the 5-minute chart, the EMA 50, were attempts to slowly build up and reclaim the 4-hour EMA 50 line. That's what it was this whole time. I'm starting to put the pieces together. At the time when I was noting them, I was like, wow, it took it. But then it would look like it fails the next day. But actually what it was doing is it was taking it so they go up, only it failed the next day, so that it could build the energy to try to go up again, fail the next day. Now it's going up, and now it's not failing. See? That's what it's been doing all along. It's been building energy. So, yeah, that was quite interesting. Okay? So, let's get into this first exclamation point E56. And that is this Friday, December 30th. Remember this day? 6 times. I made a big deal out of this on the final trading day because I was kind of frustrated. I said, you telling me 6 times, 6 circles right here, you could not take back the 5-minute EMA 50, but yet in the final hour, you rip it up. Remember I said that? I complained on that day. Okay? That's what this E56 means. Could not, failure to take the EMA 50 on the 5-minute chart, and you failed 6 times. But yet you ripped it up in the final hour, only to, on that Tuesday coming back. Remember, Monday was closed for a holiday in observance of the New Year's holiday. Tuesday we came back, you dumped it, and you went even lower. Remember that? You went even lower than when you started the surge on Friday after late afternoon in the final hour. You actually fell even lower. Okay? So that's E56. That's what you're looking at right here. Friday the 30th. But this was the first time since FOMC 1214. So it's been 2 weeks. This was the first time I had seen so many attempts. 6 attempts to reclaim the EMA 50. At the time, I just noted that. I was like, huh. I haven't seen that in a while. But now, looking back on reflection, that's like, yeah, because that's the beginning. Friday, December 30th is the beginning of the market the beginning, like day one of the market's first attempts to take the trend back. And now here we are on January 10th, and it took it back. So it took a week and a half. But I believe Friday, December 30th, was the first day it attempted to take it back. Okay? Let's go to the next slide. All right, check this out. This is Wednesday last week, Wednesday, January 4th. That would be this E5 right here. Okay? This was the first time it took it back. And I remember making a big deal out of it on Twitter that day. I was like, oh, it did it. It took it back. That was the first time. It didn't do it ever since FOMC 1214. So I made a big deal out of it. Okay? It did it. Here's the circle. Wednesday, January 4th, right here. Looking back, yeah, see when you take it back, you have power. See that? Look at that. Boom. You have the power. And on that day, see, the 4 hour right here was above the EMA 50. Right? But because this is really the first time in a long time, not counting that fake short squeeze on the last day on December 30th, this is a fake short squeeze that went higher into extended hours futures only to dump the next day. See, that's what I was like, no, this is not right. This is fake. This is not right. Because you didn't even take it during regular hours, and lo and behold, it did dump even lower than where you started from. Okay? But this one was Wednesday the 4th, January 4th. It took it, went up above the EMA, and then it did come back down and retrace. But it basically double bottomed, right? It double bottomed. And now looking back, again, this is like, oh, the first time. Okay, so it's almost like your first attempt coming back from rehab because you got injured. It's like, oh, okay, well, you're still building your strength. You're still building your strength. So January 4th was the first time since December 14th FOMC that it actually took it. Okay? And here's the gap up that morning, and here's the gap fill, right? That morning. So it gapped up and gap filled immediately. That's not what happened yesterday, but that's we'll get to that slide too. So that's the Wednesday, January 4th. Friday, January 6th. Here, this one, this E5. Look at that. Friday, January 6th. So Wednesday it took it. Thursday it gave it back because I think that was like the ADP report or something. It was some kind of report, right? Some kind of report. Jobs report that just knocked it down the next day on Thursday. But then Friday, what did it do? It took it back. It took it back. Okay? Now, that's related. That's this one right here. It took it back. I want to call your attention to something. On that Friday, remember that big surge in the morning? And then it came down and it looked like it was going to be another bull trap, but it wasn't. Here's an observation that I have now. And when it surges like this, I think you can actually, because it did it again today. When it surges like this, in a way, it almost has to. It's almost following like in wartime you're talking about Geneva Conventions. It's almost like it's following a Geneva Convention that okay, you surged in pre-markets, but you must come back down to the EMA 50 on the 5 minutes chart and reclaim it. That's what happened last Friday, right here that you're looking at right now. Surged up, came down, and reclaimed it. Then it went back up for the real deal. Okay? So just keep that in mind. Okay, so that was this right here, E5. This is this E5 on Friday. Monday. Okay. So Monday, this was the gap up that I thought was going to fill the gap immediately, but it didn't. It was a gap and go yesterday. Remember that? Up, came back, back tested right here, up. Okay? So that's yet another yeah, that would have been here. That's right here. Right here. This area right here. This is yesterday right here. The big up right here. Yep. Big up. And then this is the big retracement that a lot of people, including myself, was kind of surprised at. I was like, ooh, that's kind of deep, you know? Turns out it wasn't deep at all. Here's that same retracement. It was way above the EMA 50 line on the 4-hour chart. Okay? So there's another pass. So basically, all of these little hints that I kept circling, I was like, it passed it. It took it again. It took it again. It took it again. All of these days, these days, Wednesday the 4th, and then what was it? Friday the 6th, right? And then Monday, yesterday the 9th, right? It took it. It keeps taking it, taking it, taking it. Those are hints that, to me, now looking back on reflection, it's ready for a trend change. When it's taking the 5-minute EMA 50 back, it's ready for a trend change. It's just a matter of which one of these days it's going to happen on. Okay? And now we know the answer. It happened today, Tuesday, January 10th. January 10th. Watch this. You see, this is when Jay Powell spoke in the morning. This is the big surge up, right? But like I mentioned, Geneva Conventions earlier, it came back down right here and had to kiss, right here. You see that wick? It kissed the 5-minute EMA 50. And then it went back up. You see what I mean? It's like, it has to come to. So keep that in mind. Next time you see a surge and then you see a pullback, watch for it to go back and just touch it. Touch the EMA 50, almost like acknowledgement or something. Right? You saw that on a previous slide last Friday. It happened. Came up. Oh, back to us. Oh, looked like a bull trap. But no, it just came back to just say, no, I got you. Touch the EMA 50. Like it did right here, and then it went up back up again. So what happened today is it actually formed a wedge right here. See, I drew the wedge out, right? So, and right here is the breakout of the wedge. Boom, to the upside. Okay, so I should have drawn another E5 because that would have been today right here. Should be another E5 right here today. So now you have 1, 2, 3, 4 successful tests. They're not back to back, but you have 4 now, and now you have an official trend change. So that is absolutely something to look for. In the future, should we make a big leg lower, and you're wondering, man, when is this trend going to change? You need to start looking for, to me, several, I'll just say several, whether that's 4 or 5 or whatever, several instances of, on the 5-minute chart, the EMA 50 has been captured during the trading hours, right? During the trading hours. I've made that clear in my definition. Remember, on that Friday, this one right here, that E56, I said, nope. No. You failed 6 times that day. You don't count. You do not count. That doesn't count because you got a big fat short squeeze at the final hour. That doesn't count. And I'm glad I didn't count it because he did a fat dump on that Tuesday coming back. You see? Okay, so I mean, there you have it. Let's go to the next slide. This is the hourly slide. Here is where we ended. We are at the old channel top. Exactly. We stopped right there. Let's see what happens. How and when we get up to here, I don't know. I don't know the manner by which it's going to happen. Don't know when it's going to happen. Is it going to happen tomorrow? Is it going to happen on Thursday? I don't know. I don't know the the situation by which it's going to happen. But all I do know is you have a trend change. You have it. That 4-hour EMA 50 has dogged the markets ever since the 12-14 FOMC collapse. And now today it took it back. And that's all I'm saying. I'm not saying anything more than that. Okay? You can speculate if you want about what that could mean, but I am just saying the trend has changed. Okay? It has changed. And I will say this. However way, I think some way or another, it's going to get up in this range right here where that, the site target is. It's going to get there somehow, some way. And I will say this for you, those of you who are bears and who are shorting. Be on the lookout for this. And that is, if as we approach this area, it's more of market makers short squeeze / pump and dump style, then you can probably be confident it's going to fall. The bulls are going to fail. If it is a short squeeze, pump and dump style up here, okay, then you can be confident. I'm going to go ahead and short this because you were thrust up there by the help of the market makers, by the help of the short squeezes. Okay? However, if it is a grind like it was today, meaning they came up, they back tested, they wedged, and then they took off, and they did all of that during the trading hours, and it is legitimately done. Okay? If that is the way, if that is the manner by which the bulls reach this target zone, okay, then I think you're going to have one heck of a charging bull coming right at you. And so I would not necessarily automatically think to short it when the bulls get to that range. If the manner by which they get there was the manner by which the charts behaved today, there was no short squeeze today, guys. You saw it. It was slow grind. Slow grind wedge. It was a slow grind wedge today. There was no short squeeze today. If that is the manner by which the bulls reach their target, then you've got a fight on your hands. And I would say the move is not to automatically just short it if they reach the target destination in that manner. Okay? I'm just trying to give you some, advice. Like, well, in one situation, yeah, I would say short. If they were pumped and dumped and squeezed up there, short it. But if they grind up there, then you got a fight on your hands. Okay? That is all that I'm saying. Feel free to follow me on Twitter, where I'm giving out real-time tweets throughout the day. And please don't forget to listen to your favorite song while you're trading. Helps you get into the zone mentally. Helps you get into your flow state. All right? Please give this video a like, share, subscribe, or click to be notified when I release something new. And with that,